Hello, fellow stock market jobbers. Thanks for tuning in. Just want to give a quick little lesson here on the Qs. I'm not going to make any recommendations on what to do, but it's an educational thing that will help you out. And it's only a minute or two, or 3 or 4. So check it out. And if you want to learn more about what to do, you need to subscribe to stockmarketjobber.com. So you've probably heard a lot about the Qs. The Qs are an ETF that is based on the NASDAQ 100. And these are the 100 biggest stocks in the NASDAQ that aren't financials. So it's a very popular trading instrument, and this down here is bull talk. I mean, I can't really talk like a bull, but anyway, my daughter drew this for me when she was a little bit younger. So I thought it was pretty cool. All right, so let's get into it here. And notice my little psychedelic changes here. Or I guess I should have said transitions. So this is the Qs, the NASDAQ 100. Like I said, it's a very popular trading instrument. We could see there's some support down here. We got to support today and rebounded. There's some resistance up here. So I would say 260 to 280 is the levels to watch. But what I want to do is introduce you to the T triple Qs and the S triple Qs. So let's take a look at those and check out this cool transition. So the T triple Qs are designed to move in the same way or the same direction that the Qs do, but they're leveraged. So they're going to move 3 times as much. So if you're really bullish on the Qs, you might want to consider this, because if things go the right way, you'll earn 3 times what you would if you just traded the regular Qs. So I guess that's why it's the symbol T for triple and then Qs. So this is a leveraged ETF. So let's remember, leverage is great when things are going your way, but if it goes against you, then you can lose your money 3 times as fast. But if you're very confident and have a lot of conviction in a trade, you might want to consider this. And again, if you check out and become a member of stockmarketjobber.com, you'll learn a little bit more about, actually, you're going to learn a lot more about how to figure out which direction things are going to go or a market's going to go. And then the last thing I want to show you in this brief little session here is the S triple Qs. S for short. This ETF it's leveraged, but it's an inverse ETF. It's going to go in the opposite way that the market goes. So if you think the Qs are going to go lower and you have a lot of conviction and you're not someone who trades options, you can just buy this ETF just like you buy a regular stock. You can buy it in your IRA account. So a lot of the things, a lot of newer traders don't understand how many different vehicles or instruments are out there. But these days, with all these various ETFs, you can pretty much make money in every aspect of the market. There's a lot of commodities ETFs. You can check out our commodities page. So just remember, if you think something's going lower, you don't have to put your head in the sand, or you don't have to go to cash like all the so-called experts on the financial networks do. You can put your money into one of these inverse ETFs, and you can profit if the market goes lower. All right, thanks everybody. That's all I have to say tonight, and I will talk to you soon.